And good afternoon, everybody. Uneducated Economist here. Get the dice up. So, thank you for joining the channel today, the live stream. Hit the like button when you come into the live stream. The YouTube algorithm will love it. Pick up the video, spread it around for more people to join in. This is a really good topic today. Came across this article where, see, let me back up a little bit before we get started on this thing. A lot of times when we think about what's happening with the US dollar and what we think is going to come to the future is that the dollar is totally destroyed, that the entities out there like the corporations, the people, the governments all want to get out of the dollar. They don't like the dollar. Dollar is useless. And you hear this narrative quite a bit, right? And I have pushed against this. Oops, let me cover up the little logo here so we don't have algorithm issues. YouTube hates stuff like that. Okay. And so when we think about like how the dollar is gone, it's worthless, it's, nobody wants to use it anymore, it's out the door, right? And it's just a matter of time before nobody will be using it at all and it'll be, a thing of the past. I don't believe this, not even for a second. The dollar is incredibly strong. It's going to grow stronger into the future. And the people who have this idea that the dollar is not used or not wanted or something of that nature, that isn't right. It's just simply not the case. Now, when you think about what it is that the dollar is doing, no other nation can do what the dollar is doing, right? The United States has gone horribly into horribly into debt in order to provide the world with the safe and liquid asset of the U.S. Treasuries. On top of that, they have provided the world with the cash, with the dollars themselves, right? By buying the production of the world. So by running trade deficits, we're able to export those dollars out there to the world. The world uses the dollars, right? They want them. Now, something very interesting, even though there's this BRICS nation and the idea that the dollar is dead and they don't want to use it, dollar-denominated debt runs rampant through the world economy. That is, people have issued debts in dollars that are due in dollars that have nothing to do with the United States. Not our government, not our banks, not our corporations, not the people, nothing, right? But yet these debts are due in dollars. This is going to create a situation that the dollar grows stronger as these debts come due. Now, what I find interesting is that who are these debts owed to? Now, dollar-denominated debt doesn't necessarily mean that it's owed to the United States. There could be entities out there who have lent dollars to other nations. This is really where the problem starts to create itself. Now, if we think about the situation that China is facing, they have a lot of dollar-denominated debt. Let me read this to you. This is from Dollar Funding Stresses. I left a link down in the description. This is a working paper that was written, I think, in 2022. It came out in 2022, so it's fairly recent. All right. Let me see if I can find this spot that I was just reading. Oops, I just kind of passed it up here. Here we go. At the end of 2019, Chinese non-financial firms had $590 billion in outstanding US dollar-denominated bonds, accounting for about 36% of all dollar bonds issued by emerging market economies. 40%, or 236 billion, is attributed to bonds issued by Chinese property developers. See, these were people who were borrowing in dollars. These debts are due in dollars. These Chinese corporations and the non-financial firms that are out there have to come up with dollars in order to pay those debts back. Now, this is really where I think a lot of people start to misunderstand what it is that's happening out there with the global economy. Because, see, China owes all kinds of people out there dollars. They need to get a hold of dollars in order to pay those debts back. How do they do that? They do that by selling stuff in dollars in order to acquire the dollars to pay those debts, right? This is a couple of years ago, so things I'm sure have changed some. But what I would keep in mind is that not only is China owed, right? Or I'm sorry, owing dollars to other entities out there, right? Because of these dollar denominated bonds, but they are also owed dollars. Now, if you take a look at the description, you can find where nations like Laos is heavily indebted to China in dollars due to their infrastructure projects that they have built. China lent them money to build all kinds of infrastructure, and now they can't pay it. Who does that belong to now? If you default on your loan, what happens to the asset that was backing that loan? It gets repossessed, right? So now China is sitting in a position in which that they have issued out a lot of dollar-denominated debt to the world. All kinds of people out there. Just take a look at Laos. Take a look at Sri Lanka. Sri Lanka was sitting in the same position. Dollar-denominated debt. They could not come up with the dollars. They were going into default. Right? This is going to be a painful experience for everybody out there as the dollar strengthens. And that dollar strengthening is benefiting China. Now, it does hurt China, as we just found, right? Because they have a lot of dollar-denominated debt, but they have also issued out a lot of dollar-denominated debt. China's U.S. dollar, let me see here. Here we go. This is talking about China's exposure to the dollar, right? Although we are unable to obtain an all-in picture of dollar funding exposure in China, given the incomplete available information, the trend toward greater U.S. dollar borrowing and lending by Chinese entity is unmistakable. Right? See, all these people look at this and they see it in an incorrect fashion, in my opinion, right? When they think about like what it is that these corporations, these people, all these countries out there are doing when it comes to getting out of the dollar, they are misunderstanding the situation. They do not realize how much exposure to dollar-denominated debt that all these nations have. Not only in their own debts that they owe, but the loans that they have given out. This is all done in dollars. Now, what I find interesting is that as people say that they want out of the dollar, that they don't want to participate in it, at the same time, China's taken advantage of that situation, destroying these other nations with stronger dollars, and not like they're like, hey, we can be ruthless if we want, you owe us, right? And now that's exactly what they can do. They don't have to go through and renegotiate these loans, right? I mean, is it their responsibility to make sure that they can provide a way of these nations to pay back those debts that they have lent to? I mean, is that their responsibility? I don't think so. But it is their responsibility on their own behalf to take responsibility for the fact that their investments are not paying. So what do? You repossess them, just like any business would do. And so I find this to be very interesting, considering that they have spent years creating this situation, decades even, putting themselves in a particular situation that if the dollar was to ever grow stronger, it would totally benefit China. Here's something I haven't, and for those of you, like, I'm reading kind of through this really quickly, just kind of finding these different parts in here. We actually did a breakdown of this entire dollar funding stresses in a live stream, a members only live stream. So if you haven't been a member, or if you are a member, go and check it out. So if you're not a member, become a member to the channel. You'll be able to find that live stream where we covered this particular topic. Well worth the dollar, right? While there were many motivations for issuing dollar-denominated debt, as noted in Section 2 of this, excessive buildups of dollar funding to Chinese corporations and financial institutions are concerning whenever stressful conditions ensue. Recognizing its institutions' large and growing exposure to US dollars, Chinese authorities have taken mitigating measures, but their effectiveness remains unclear, especially in the near term. There are several existing avenues through which China could obtain US dollar funding on short notice. However, the reliability of these avenues is uncertain. Chinese banks are generally required to maintain mostly balanced positions of foreign currency denominated assets and liabilities, including offset sheet derivative positions. However, even if overall exposures are close to zero, maturity mismatches whereby short-term dollar liabilities need to be rolled over are problematic. The new Basel III requirements, specifically the net stable funding ratio, attempt to limit excessive risky maturity mismatches in each currency, although China has officially implemented this standard to counter excessive mismatch risk. Maturity mismatches are an integral part of typical banking business model. So they're well aware of it, right? It's just like, when I read stuff like this and I think about like some of the things that are going on out there within the mainstream media narrative, it's really shocking to think about how so many people don't know stuff like this. Like, it's obvious that it's obvious out there that there is a particular narrative that is being pushed, right, through the mainstream media, through the social medias, that somehow the dollar is not desired by the globe. Like, this is such a misunderstood, misguided concept. Like, I just don't even understand how it is that people can't see things like this. Right? How much demand for dollars exists out there in the world? Everybody seems to think that nobody wants dollars, right? They read all these stories about how China is dumping treasuries, but yet don't have any idea that they are trying to get a hold of cash to pay their dollar-denominated debts. And the easiest way to get cash is to sell assets denominated in dollars, which happens to be treasuries, is the fastest way to cash. So when you see all these nations out there dumping treasuries and people are like, oh, they're getting out of the dollar, what is going to happen here when they're getting out? Everybody wants to get out of these treasuries. Do they even have any idea that these nations are in desperate need of dollars to pay their debts back? I mean, do they ever mention that into any one of those articles every time you hear about treasuries being dumped by foreign nations? Do they ever bring that up? Does anybody ever bring up the fact that every time the dollar goes a little stronger and these nations are being destroyed by the king dollar, that destruction is actually the benefit of China? It doesn't benefit the United States. It wasn't the United States who had invested billions of dollars around the globe in infrastructure projects to all these foreign nations and do it in dollars. They didn't do that. I mean, they might have done some, but they didn't do it like China did. Everybody knows about this Belt and Road Initiative. How many people know that it's all due in dollars to China? Right? Sure, it hurts China to have a strong dollar. They have a lot of dollar-denominated debt. You can see their property developers are suffering in a painful experience due to the high dollar. But how many nations around the world are now suffering the consequences of having borrowed dollars from China and now owe China dollars that they can't get? Federal Reserve is tightening up liquidity. They're pulling dollars out of the system. King dollars destroying the world, and who is getting the benefit of that? Think about this. China owns Laos now. I mean, they don't own it, but they own it, right? If you owed all your house payment, your car payment, your credit card payments, all the other stuff, and you owed it all to one dude, would you feel like that he owned you? Like every every work that you do, all the time, the effort and energy and all that money goes right to that one person because they lent you the money that now is your life, right? That's what's happening here. They owe China. China is the beneficiary of a strong dollar. And this is something that I have brought up so many times in the past, and people call me delusional and crazy and all kinds of stuff. And then there's the evidence of it right there, right? Let's see what you guys have to say. All right. Wow, look at all these comments. Oh my gosh. Okay, you guys are really, really going for it. Let me just cruise down here to the bottom. All right. What do you think the next false flag event will be? The flu? I don't know, the dude. That's hard to say. Chicken flu. Yeah, it depends on company structure. If it deals with a lot of global businesses, i.e., Apple, Coca-Cola, and is a negative. If it's a domestic, is a positive. Million. I meant trillion. All right, just 10-6 factor difference. Why doesn't China insist that U.S. pay for all their yuan? What? I don't understand the question. All right. What do you mean, Donald? Yeah, I got the same thing, Brody. All right, Simon, thoughts on any upcoming special purpose vehicles? The only thing the only thing that I can really see that's going to be like a major change to, because like you think about it, the special purpose vehicles is an entity that's separated from the Fed and from the Treasury. At least if we're talking about the use of like the special purpose vehicles with like the corporate debt lending facility. However, we're not in unusual and exigent circumstances, and so therefore they can't have a special purpose vehicle to even use, right? Because we have to be in an unusual and exigent circumstance in order for them, because they can't legally buy a lot of the debts that they were during the pandemic, right? So corporate debt lending facility was definitely like the big one out there, because everybody said that the Fed was going to be picking the winners and losers. I know I was one of them, right? So that was one of the big ones. It was a huge credible threat, but they hardly did anything with that corporate debt lending facility. They bought a little bit, but it was the market willingness to participate within the market itself, within the corporate debt borrowing, or the corporate debt market, buying up those junk bonds and stuff. But the Federal Reserve didn't really do much in there. And as far as like setting up something right now, like what would it be for? Like, if you set it up to buy, like, say, mortgage-backed securities, then you would drive the yields down on mortgage-backed securities by being a buyer of mortgage-backed securities. I don't think that's necessarily what they want to do, right? They want to keep the interest rates elevated to try and put that pressure on inflation and get that down, which is BS, right? We all know that they're actually trying to raise the neutral interest rate. But we know that here on this channel. Nobody else in the entire world knows it except for a handful of people who will mention it occasionally. But everybody's under the impression that the elevated interest rates is to bring inflation down. So with that being said, like, what would they need a special purpose vehicle for at this point? To do what? Like, what would they need to buy? You know? And I don't know what it is that they would need to try and support the market with, like, into. Now, if you were to ask me like what the next big purchasing is going to be, like, I don't think quantitative easing within the financial markets of buying treasuries is going to be as, it's going to happen, but I don't think it's going to be as prevalent of the stimulus coming from the Fed as it's going to be buying into foreign debt. Like, they will do the same quantitative easing, but instead of buying treasuries, they may go out there and actually buy the debt of foreign nations out there. Now, this is kind of an interesting topic because not a lot of people talk about this or even discuss it. So it's like trying to find information on this, even through the Federal Reserve, is a little difficult. I got this from Ben Bernanke's speech back in 2002, where he talked about deflation and how to prevent it from ever occurring here in the United States. He said that once you have gone through all the efforts, including that of quantitative easing, and that no longer is an effective tool, that you can expand the menu of purchasing for the balance sheet, for the Fed balance sheet, expand that menu of purchasing into foreign entities, into the foreign nations, and foreign sovereign debt, right? Now, to me, I think about that, and I was just like, man, that is very odd to think. Like, you're gonna buy like the debt of Canada, right, or something, or new of Australia or whatever. You're going to put that on the balance sheet, and then you're going to issue out Federal Reserve notes. is that Federal Reserve note going to say United States of America note on it, or is it going to say Australia, right? Dollar of Australia, dollar of Canada, right? Are they going to issue out Federal Reserve notes to a foreign entity in that, in a dollar, but not a US dollar, but a Canadian dollar? Like, you see what I'm getting at? Like, is that liability going to be be the dollar or the cash of that particular nation? You see where I'm kind of getting at? Like, right now, the United States and the dollar itself is the liability of the Federal Reserve. So Federal Reserve notes are liabilities of the Fed, right? All those are due back to the Federal Reserve at some point, plus interest. So if they are buying U.S. Treasuries, they're buying mortgage-backed securities, they're buying gold, talking about the Fed, if the Federal Reserve is buying all this stuff, what they are doing is printing up liabilities, dollars, issuing those out and buying that stuff. So if they issue out United States dollars to buy foreign debt, is that does that leave the liability of the Federal Reserve with a US dollar, or does that leave the liability of the Federal Reserve with a dollar from that particular nation that they have bought the debt from? You see, like, the assets that the Federal Reserve hold are that of the United States, like, mortgage-backed securities, again, like, mortgages of the United States, treasuries, the debt of the United States, like gold, which was, again, the property of the United States, SDRs, which is like special drawing rights, which is like a basket of currencies out there. So I guess that's kind of like a little bit like buying into foreign currencies or something, but still, it's it's the asset of the Fed, or the asset of the government, and loosely. So again, that's a really weird thing to think about, like how it is that they could provide the world with this liquidity. Like, if China has issued out a lot of dollar-denominated debt, they need dollars. Well, could the Federal Reserve go and buy the debt of China, take Chinese debt, put it on the Federal Reserve's balance sheet, then issue out Federal Reserve liabilities in Chinese dollars, essentially, since they're buying Chinese debt? So weird to think, And then would that liability cover the debts of the US dollar, like dollar-denominated debts? I mean, is it Federal Reserve liability debt, or is it actual United States dollar debt? This is so many questions out there, to think about. All right, Adam Colin, thank you so much for joining the channel. Go check out Dollar Funding Stresses in China. You're really going to enjoy that live stream. It's very boring, right? But we go over a lot of really, really useful information, especially understanding how much dollar-denominated debt comes out of China. Not only them issuing out that debt, but also taking on debt, in that. So they'll loan money out in dollars, but then they have also taken on a lot of dollar-denominated debt. All right. How is the neutral interest rate calculated? Is that something we can see along the Fed, or is it just guesswork for us? It's going to be pretty much guesswork. Now, because the neutral interest rate is not something that can be instantaneously observed. Like, there's no real-time charting of the neutral interest rate. Now, if you want to get the best idea of what it is that the Federal Reserve is doing to try and follow where the neutral interest rate is, it's something called R star, right? So if you go and you Google like R with a little asterisk right next to it, like R asterisk, and then Federal Reserve, you're going to find all kinds of information on R star. They also have the same one for unemployment, U star, right? So R star is kind of like an idea of where the Federal Reserve has their best guess on where the neutral interest rate could be. Now, again, it's not set in stone that this is the neutral interest rate, this R star. Neutral interest rate can only be observed over time, right? So if you look back, you can say, okay, that's what the neutral interest rate was at the time. But what it is today can only be observed in the future, right? So once we get into the future, we can look back and say, okay, that's where the neutral interest rate is. So the R star takes future inflation expectations and what people are feeling that future inflation expectation is in accordance to what the current inflation is. And they got this weird mathematical formula for figuring all this out, and then they come up with it and they call it R star. All right. Now, very few people follow or even think about neutral interest rate. And if you were to go and listen to some of the people who were discussing neutral interest rates, they were saying they were somewhere between, like, say, 0 and 1.5%. A lot of other people said that it was somewhere around 2.5%, right? So there's no real telling of where exactly the neutral interest rate is, was, or is going to be going into the future. The only thing that I can really suggest is to think about the direction in which that it is going. I think that is really important, right? Over time, if you have low, very low interest rates, historically low interest rates, hitting, like when the Fed hit the lower bound of 0 and kept them there consistently for like almost a decade, right? This lowered all interest rates, lowered the inflation expectation, and lowered the neutral interest rate. So this long time that we had experienced low interest rates lowered that neutral interest rate close to 0. Again, nobody knows exactly where it's at. So the idea of raising the neutral interest rate, that rate that is neither accommodating nor restricting the economy, in order to raise that neutral interest rate, what you would have to have is the perception in the economy that there is going to be rampant inflation going into the future and consistently high interest rates for a significant amount of time. If these two things are occurring, the neutral interest rate will begin to rise. Again, we can't observe where exactly it is, but we can feel the effects of it in the economy when people are going, man, the resilient markets. Why it is we haven't hit the recession. People predicted the recession last year. We still haven't hit it. They're saying there might be a soft landing. All this that we have as far as confusion on why it is that the economy hasn't crashed is because that neutral interest rate is slowly rising, getting ever closer to the Fed funds rate, which is standing still. So if this neutral interest rate over time is slowly ticking up, it's making the restriction on the economy less over time. So this is the reason why people are feeling that the economy isn't as painful as it should be, or that we aren't experiencing the pain like we thought we were going to. Right? This is the reason why. Nobody knows that because nobody follows the neutral interest rate, and you sure as hell don't hear a whole lot about it on the mainstream media. Right? So everybody is just like, man, why is this so resistant? Right? Well, it's because that neutral interest rate continues to rise so long as the inflation expectation remains elevated and the interest rates remain elevated. And it's so funny to think, but actual information that is painful experience to the people, right? It says, hey, you're going to experience more inflation, like slowing all this stuff, right? You're going to hear all these bad things. Interest rates are going to remain elevated. The inflation's going to remain elevated. You got all this bad information coming out, and people are like, oh, this feels so horrible and icky, and I can't take it anymore, and screw the Fed, and screw the government, and screw everybody out there, and screw these corporations and all that. Neutral interest rate rises. Restriction becomes less. Right? The painful experience is actually reducing the amount of restriction within the economy. Okay? The more pain you feel, the less restriction it actually takes place over time. Nobody knows this. Nobody talks about this stuff. Right? The Fed does. But you got to read through their speeches, and you got to understand what it is that they're saying, and you got to internalize that information, because it's broken up into so many different places that if you can't piece this stuff together, there's no way that the information is going to be presented to you. It just doesn't. Like, there's nowhere out there that is being presented to you. Not like I do it. Not like, I mean, this is the stuff that I have learned and figured out and researched and put together and come out here and say, hey, man, all this stuff that you're seeing out there, it's not right. It's not like... There's no target. There's no 2% target. That doesn't exist. Not in the Fed's mind. Not for monetary policy. All right. That's like a completely imaginary thing that the mainstream media has completely propagandized for the Fed's benefit, again, you know, by attempting to raise that neutral interest rate, trying to convince people that the Federal Reserve is trying to go for a target that doesn't even exist, right? So it's just like watching all that stuff take place out there, and so many people who have fallen in line with it. It's just absolutely amazing me that they were able to pull it off. Like the Fed was able to actually pull this stuff off. You know, they lost their monetary policy a few years ago, right? Like they were done. They were like out of the game. It was all over. But nobody realized it. Nobody knew it. And so since nobody knew it, they were able to continue on playing their game. And they did it literally through the words, through the credible threats. And it totally worked. You know? It's like, I found an article today that says, yeah, why would the Fed move? And I'm thinking, yeah, finally, somebody who sees it like I do, right? Like, I'm not saying that the Fed is like a good thing. What I'm saying is that the Fed is achieving what they were trying to do. Low unemployment. Oh, yeah, right. I know, like, real unemployment's much higher, whatever. Not according to the Federal Reserve and what it is that they look at. And since I'm not in charge of monetary policy, I can't tell them to go and look at, some other unemployment number. I have to look at the unemployment number that they are looking at if I want to understand what monetary policy is going to do, right? Like, I could wish and hope and dream that they look at another number and say, hey, why don't you look at this one instead? They don't. They look at this one, and it says it's here. So that's what I have to follow with them if I'm to understand what their monetary policy is going to be going into the future. So they are achieving their goal of low unemployment. And inflation is coming down to their goal, which is moderately above 2% for some time. Nobody knows that, but the Federal Reserve and the other central bankers who are in communication with the Federal Reserve. But you can go and look it up for yourself. Google AFAIT, asymmetric flexible average inflation targeting. Right? Go and look at that. Go and read Jerome Powell's speech given August 27th, 2020. Towards the very end, about 3/4 of the way through that speech, he details it out exactly. We are not going for a 2% goal. We go for a 2% average inflation rate over time, which means that appropriate monetary policy would seek to have inflation moderately above 2%, with no mathematical formula to figure that out. All that stuff was stated within August 27th, 2020 speech given by Jerome Powell. All right. This is like... Not internalizing this information is the dangerous part. Like, even if you thought that I am just completely off my rocker and have no clue about any of this stuff and just like completely making it up, right? Even if that is the case, if you internalize this information, right, just take in some of the stuff that I have been saying and you go and read some of the mainstream media articles, you will absolutely see the lies. You will absolutely see the credible threat being pushed out there. Right? It'll be so obvious to you. And then you'll have to look back at your own beliefs and you'll say, damn, which one of these is the brainwashing? Right? The one that they're pushing out there to all the mainstream media watchers and viewers that propagandized information, or the one where this dude on some YouTube channel is talking about things that nobody else is talking about, pulling out information and speeches given by the central bankers themselves with communication to the other central bankers, not the ones to the public, right? Could it be that everybody else is out there is brainwashed, or is it me, the only one? I brainwashed myself with the Federal Reserve's information, right? I mean, did they create all this information to absolutely convince one dude on YouTube? Is that what they did? And then everybody else got the real information, and then one dude on YouTube got the false information? Is that what's happened here? Or did one dude on YouTube actually break down hundreds of speeches given by the Federal Reserve, pouring through hundreds of documents of monetary policy to try and come up with a theory that is so accurate, in my opinion, so accurate to the reality of the situation, and so many other people are out there confused about why it's looking the way it is, and I'm sitting here explaining it day by day, right? And so I think to myself, man, am I the delusional one? I must be. I'm the only one speaking this way, so I must be the crazy one, right? And all this information that I got from the Federal Reserve and all the speeches and all that stuff, they did all that work and everything just to convince me. Nobody else, just me. Man, I am special, right? It's just crazy to think. All right, moving on. What time is it? All right, I got 15 more minutes, guys. Down here, dentists make about $5,000 an hour, which is obviously a crime. Mechanics do more complicated work than that for less money. Yeah, Bryce, but does a mechanic have to go through the sheer amount of work in order to acquire the skills that it is to be a dentist? Like, I understand mechanics is pretty tough. I understand economics is pretty tough. I don't have any kind of degree or credentials or anything else to say, hey man, I have all this idea and understanding of economics, I should get paid more, right? But I don't have the degree, so I don't get to get paid more with this information from some corporation or some other place out there. I got to use this information for entertainment value and come out here on YouTube, and I think I do pretty good at it. So for an economist out here on YouTube entertaining, it's not a bad gig. I mean, Uh, I listened to Boom Luongo earlier, and he thinks the system will baruficate, and there will be domestic currency, then currency used for trade that is backed by gold. Interesting to think about. It won't happen, Benny. I'm sorry, there will be no trade done by gold. And the reason is that the moment that the person who acquired the gold gets it, like they sell their product for gold, they're going to hoard that gold, and then there won't be any gold for anybody else. And this is obvious because this is what happens throughout history, and there's so many examples of it time and time again. Right? Cantillon's essay on economic theory, 3 chapters, 6, 7, and 8, and part 2 of that essay explains it perfectly. There will not be a gold currency. It can't happen. All right. Now, I'm not saying it can't happen. What I'm going to say is that if it does happen, what you are going to find is that the nations who have a high standard of living, who are exposed to the fiat currency like the United States is, will suffer in poverty and misery horribly because of that situation. We do not manufacture enough to support our standard of living. We will suffer the consequences of that. Our standard of living will diminish rapidly, right? There will not be any gold standard, right? Unless the fiat currency of the United States dollars completely collapses. Then yeah, okay, maybe a Bitcoin, gold, something or other can step up, but it'll only be a matter of time before that gets hoarded away and it'll change to another fiat currency. All right. You understand economics and capitalism so well, you should be crushing it in the equities market. Apparently, much less intelligent investors are crushing it big time. Here, Jay Luther, I understand that I could be doing stuff like that. Like, I totally get it. In fact, I could be using this channel to be making tens of thousands of dollars a week by sponsorships. And I won't even have to worry about investing. I could just do those sponsorships and make all the money that I could ever want. Right? However, I don't like the feeling that I get from doing that. I'm not here to take sponsorships. I'm here to spread this information. I'm here to share these ideas. That's what I'm doing. Like, when I go to try and sell something, I want to sell the membership to this channel. $1 a month. You get access to all kinds of really good, deep information about monetary policy through breakdowns of speeches that nobody else is doing. The value of that is off the charts. It's worth a hell of a lot more than $1, right? I mean, how many people pay for courses, thousands of dollars for courses and stuff to get information? I'm selling it for $1. All the information that I break down and all that, $1. You have access to all of it, right? We try and do these member-only live streams once a week or so. That information, so valuable, right? And it's only $1. Now, I think about that. That is the direction that I want to put energy towards. I don't want to do research on commodities to figure out how to position myself to make money off of that. I could do that. I probably could make money off of it. I might do it with lumber now that I see the lumber market hitting that position in which that you buy low, sell high. Well, buying low is coming up. How do you do that? Right? What is it that you need to position yourself in? Do you get into leveraged ETFs, or do you get into the home builders? Do you get into the lumber mills? What is it that you get into? Right? There's so many questions, and now you have to do all this research, and now pretty soon I'm not looking at monetary policy anymore. I'm looking at all these other companies and which one I can use to try and profit from, right? Get that out of here. Let's get back to monetary policy. This is really where I want to be. This is what I want to look at, right? And then whatever money comes, man. I'm not like, I mean, the money will be there. I'm not stressed about the money. The universe will take care of the money part of it. Yeah. All right. Layoffs and repos are on the horizon. Futures trading. When the question lacks all the context, how can it properly be answered? Well, sure. But honestly, should trade Fed day if you think you can predict what the Fed has to do. Okay. Like, go buy lumber futures, man. Like, go buy nail. Right here. You want it? Nail. Nail is a 3 times leveraged home builders, home supplier ETF. Right? Careful with 3 times leverage, man. You can lose just as much money as you gain off of it. But as far as the position, I would keep an eye on that. There you go, man. Right? So you wanted some, why don't I do it? How do you know I don't? Right? I don't like talking about it because that's not the information that I want to be spreading. Right? I'm not here to give financial advice. I'm not here to try and give investment advice. I'm not here to try and do any of that stuff. I'm here to explain monetary policy so that you can make the best decisions for yourself. Could I make money off of it? I could make money doing all kinds of stuff. Like, why would I throw money at investments when I can throw money or throw effort towards doing sponsorships and make a ton of money doing that? Right? Why do an investment? Just do sponsorships. Why don't I do all kinds of stuff? Right? Because I don't feel that's my passion. I don't feel that's what drives me. That's not what motivates me. This does. This is what does it. Breaking down this information, finding stuff that nobody else is seeing. Absolutely disassembling all the mainstream media BS. Right? Taking Time magazine articles and showing exactly how they are using this article to propagandize the monetary policy coming from the Federal Reserve, convincing everybody that they're going for this 2% target, so everybody's like zombified on it. How many people have come out here and said, hey man, don't think about a 2% target, think about the average inflation rate over time, with no mathematical formula for figuring it out? This is the type of understanding of economics that then allows you to make the best decisions for yourself. Who cares about making money, man? How about you make the best timing on when you need to buy a house, right? Or a car, or start a business, right? This is you can go out and put your money towards all kinds of things that are going to be investments and grow. But is that necessarily what is driving you to provide value to this world, right? Starting that business, doing YouTube videos, working hard at your job. Right? Understanding how it is that this monetary policy is impacting your personal life is so much more important. Yeah, let's make money, man. Let's go and invest in something. Why not? But I don't know when the Federal Reserve is going to turn around. I don't know when they're going to lower interest rates. I don't know what what they're going to do with the balance sheet and the mortgage-backed securities. Now, when I find information, I come out and I talk about it, but I couldn't tell you, the date in which that it's going to happen. I can just tell you that they're not going for a 2% target like everybody believes. I can tell you that much, right? And I can tell you that the average inflation rate over time has no mathematical formula for figuring it out, so it's going to be pretty difficult to time it. I can tell you here at the end of this year, they are going to do a re-evaluation of the monetary policy, and that there is going to be some serious information to be understood at that point, just like what happened back in August of 2020, August 27th, through that speech given by Jerome Powell, when they completely changed the way that they did monetary policy, and nobody caught it. Nobody. Except for me, right? Who was stuck on it. And it was just what is this average inflation rate over time? And no, there's no target. It's an average inflation rate over time. Why does everybody keep talking about a target? It's not a target, right? There is no target. But nobody knew that, and nobody would talk about it. And I was the only one. And I'm like, well, hell, if I'm the only one, then everybody else has got it wrong and I got it right. And I'm the only one, so I must be delusional, All right. I got to go, guys. I got to go back to work. It was fun hanging out with you. But yeah, definitely check out Dollar Funding Stresses in China, right? Talks about how much the dollar is going to destroy the world and how China has actually leveraged that position by lending money out there to the rest of the world in dollars. So when those dollars get strong, those nations have issues, it's China who is the beneficiary of it, right? So the strong dollar is a benefit to China. You remember that and keep an eye on that. So every time you see those U.S. treasuries getting dumped out there, think about how much dollar-denominated debt that China owes, right? Think about that. All right. You guys are awesome. Uneducated Economist, thank you so much for the super chats. We got 290 people watching with 141 likes. Go hit that like button before you check out of the channel. By hitting that like button, the YouTube algorithm will pick up the video and spread it around, and it's another way of supporting the Uneducated Economist. If you want to buy this essay, right, I have the essay link down in the description for Amazon, so you can go and click on the Amazon link to this particular essay. I get a little commission by following that link. However, you do not have to buy the essay. You can get it for free at the Mises Institute just by typing in Cantillon essay on economic theory. You should find it right away. Now, if you do happen to follow that Amazon link, anything you put in your cart after that, for the next 24 hours, I will also get a commission on, right? So you don't have to buy the essay. Just go buy whatever you want, right? Just buy whatever you want off of Amazon. Just follow that link down in the description first, and I'll get a little commission off of it. Again, you get to support the Uneducated Economist just by doing your normal thing. All right, Uneducated Economist, you guys let me know.